Alrighty guys, what is going up? I hope you guys are all having a great and an amazing day today. Now in today's episode, we're going to be talking about the top ETF that I am looking to buy in 2020. Now the reason why I'm so excited about this is because it has a ton of my favorite stocks actually in this ETF. We'll talk about it all in this video. So I hope you guys enjoy it, and overall I hope you guys learned something. And if you have any questions, go ahead and ask them down below and I will get back to you guys. So now let's jump into it, roll the intro, let's go. Bam! So the ETF that I'm actually looking to buy, I do have one share of it right now, but it's around $38 and it's ticker symbol OGIG. It's backed by O shares, and I'm sure you guys know the amazing investor, Mr. Wonderful. This is actually his company and he's one of the board members. So the performance of this ETF is actually really insane. The 1 month performance is around 15%. The 3 month is around 25%, 6 month is around 32%, and the 1 year is around 44%. So this ETF is more than doubling what the S&P 500 does, what the Dow Jones does, and what the NASDAQ. Now the reason why I love this one so much is because look at its holdings. The holdings are Amazon, TENCENT, ALIBABA, Microsoft, Alphabet, Facebook, Shopify, and a ton of other very popular tech stocks. So I know you might be saying, well Carter, what is the expense ratio? Because that's super important, because those are all the fees and commissions that O shares is gonna take. And I'm completely fine with them, taking a little bit of the money because they do a lot of the heavy lifting. Now the expense ratio for this ETF is 0.48%, which is awesome. Now I have this thing called the 1% rule. Any fees or anything like that have to be under 1%. The reason why is because fees add up so much in the long term. So this is way under that and I'm super excited. So now let's actually go ahead and look at the chart. Let's look at support, resistance, where I see it going. Should you get into it now? Should you wait? What should you do? Let's go. Now we have ticker symbol OGIG. Let's go ahead and look at the holdings so you guys don't forget them, on why this ETF is so high in price and honestly is going up in value so much. Now look at all these huge blue chip stocks. If you guys wanted to buy all of these individually, it's going to cost you a ton of cash, thousands of dollars. Amazon coming in at $2,500, Alphabet coming in at like $1,300, Facebook $200, Shopify $300, Zoom $200. Now all these are going to cost you a ton of money. Now look at this huge growth rate here. With all this volatility in the market, yes, we did have this, ETF fall around 29%, which really wasn't too bad. The S&P 500 fell about 44%, which is absolute crazy. And then look at this, we had this beautiful growth. The reason why it's growing so much is because all the holdings are, companies that really did not majorly get affected by this whole overall recession and pandemic we're in. So now, where do I think it's a fair price? Here's what I would highly recommend doing. Dollar cost averaging. How this works is you just set a day each month to buy one share. What this is going to do is you guys are going to average your price. One of the best ways you guys can do it, because if that's say you guys continue to buy boom, and then it starts falling and you buy more, now your average price is going to drop to like $25 and you just keep doing it. It's one of the best ways to build wealth. Another thing that you guys always have to consider is risk to reward. So is it worth it to risk your money in this ETF? Me personally, I think it is. I think it's 100% worth it to buy an ETF. $40. You diversified into some of the largest corporations in the United States. You're an investor and only $40. $40. Now the downside, no dividend, but that's really not too big of a deal because this is more of a growth rather than a income ETF. Now that's completely fine because some of these holdings like Microsoft, they do pay a dividend. Yes, you're going to be getting a couple pennies to hold this. It's nothing huge, but I do think this is definitely one of the best long-term ETFs out there right now. I don't want you guys to miss out on this opportunity. So literally don't do it. You guys can do it. Right now, looking at the RSI, it looks like, yeah, it is a little overvalued, just by looking at this one study, but do the dollar cost averaging, you guys will not regret it. Trust me. Also, if anytime this ETF falls more than 4%, double what you guys normally would put in.
because once this whole thing recovers like it did right here, you guys are going to be making a lot more money.
So that is it though. I hope you guys enjoyed the episode, and if you guys did, make sure you guys smash the like button. We'll see you guys tomorrow in another episode. Remember, stay happy, stay positive, and overall stay safe out there. We'll see you tomorrow, guys. Take care.